Thank you, Soccer Mom. Chris has been vindicated this week. Yeah. How many weeks, how many months went by with me saying sit in cash and don't F up? How many weeks did I go by saying relax? You don't have to rush into the market. How many weeks did I sit by and say don't do anything, right? Wait in cash for proper setups as long as it takes. And then in a moment's notice, I made more money than most people make in their day job for a year. My returns 35% so far. All of this happened in the last since Friday. Today's Wednesday. All of this happened since Friday. I'm telling you, that's how trading is done. You can go weeks and weeks and weeks without doing anything. But the problem here is that most people can't do nothing. Most people can't sit in cash and don't F up. Most people will say, if I'm sitting in cash, I got to go do something. Just don't. Just wait for proper setups as long as it takes. I mean, legitimately, it is so hard to do, but it also is what pays the bills. Joe is one of our Outlier University students, by the way. Joe, what's going on? I have been schooled by our Outlier community, and I love it. You were all correct that IRA accounts can trade options on some brokers. That's great news. Thanks again for all you do out there, for sure. So I trade multiple accounts, and one of them is an IRA account, and I trade the options in their IRA account because I can, and it's awesome. Right? It is awesome. Yeah, the speakers, right? Keith says, I was looking at SMCI yesterday, never pulled the trigger, and he's feeling very annoyed. Keith, there's a great chance I'm going to buy SMCI here in about 20 minutes. Now, I will be the first person to say, I can lose on this trade. I know I can lose on this trade, but I also know that everything is set up for me to take the trade. And if I do take the trade, then I'm following my plan. If I don't take the trade, then I have invalidated the plan. Might as well just go to Costco. I got nothing else that I should be doing here. Certainly not trading. Manny and I can go to Costco. He can bring oh Manny, dang it. I was gonna make a good segue for your beautiful grandson. His name's not Nico. Dadgummit, I forgot. Me and Manny and his beautiful little grandbaby will go together to Costco and buy some speakers. Mike G, I've been watching you trade GM, Hood, Etsy. How do you pick those stocks in the first place? I missed that part. Well, well, I use what's soon to be trademarked as the Outlier 9. Right? So I'm looking at the trend of the market. I'm looking at the signal, if it has a buy or sell signal in the market, and I'm looking at the breadth of the market. Then I'm looking at the different sectors, looking at the fear and greed, looking at the breadth of those sectors. And then I run my screener inside of Outlier, and then I go through each stock looking for if it's trending the right way, if it's a buy or sell signal, if it has fear or greed that's moving in my direction, and if it has the outlier blocks, right? I mean, legitimately, that's what I do. That's what I did. Receipts are on YouTube. Through the Muck and Meyer says, not sure my itty bitty baby hands can hold the receipt, the extra cash, and all my speakers at once. Klaus is here from Denmark, and so's Stocky Locky. I think Stocky Locky's from England, right? Or I don't know if you go by England, maybe the UK. I'll go with that. KS Fresh is a legend. I'm just here. I'm just hanging out with you guys. Emmanuel says, it was a nice explanation, but I don't know much about options, so I have some work to do. That's all right, my dude. I spent so much time trading options and sleeping about or thinking about options and dreaming about options. It is a real thing. Kevin says the speaker analogy partially made sense. The return for a higher price than paid does, but the intrinsic value of the speakers isn't the same as the intrinsic value of the options you get to keep. All right. I see where you're going there, right? So here's one of the great things about rolling options. And in fact, Skinny Buff Guy, I don't know if you're here, but I hope you are. Talking about gamma and delta. Oh, it's about to get real nerdy. Ready for this? So delta is the price of the the change in the price of the option for every $1 change in the price of the stock. I think this will be better illustrated with an options chain. So delta, so for example, this strike right here, the 185 on Apple is a 90 delta, meaning for every $1 that Apple goes up, the 185 strike will go up by 90 cents. Okay. Now, the rate of change to go from one to the next is called gamma. You'll notice that the deeper in the money you go, the higher the delta is. The rate of change between one to the other is called gamma. The gamma is the second derivative. I told you we were going to get nerdier here. This is my thing. Oh my gosh, this is my thing. Gamma is the rate of change of delta, right? So here, this is going to sound really, really complicated at first. I'm going to boil it down. You're going to be like, oh, okay. Hold tight. I need some props. So first prop is a Jurassic Park Jeep. Jurassic Park Jeep. There we go. First prop. Second prop is my car, a Tesla Model Y Performance. I love this car. So we have two vehicles right here, right? The Jeep and the Model Y Performance. Okay, delta is telling us how fast they're moving, right? Delta is like, hey, this one's going at 70 miles an hour. This one's going at 60 miles an hour. We can see the rate of change by what the actual speed is today. Gamma is how much the accelerator is being applied. So if they're both on cruise control, your delta is not changing. But let's say the Jeep is mashing the gas pedal and it's going from a 60 delta to a 70 delta to a 75 delta to a 78 delta. And that's because the gas pedal is being mashed. Therefore, it's increasing the speed of that delta. It's increasing the speed of the Jeep. So this one's still at 70 because the gamma isn't changing. This one, the gamma increased. Therefore, it is causing the rate of speed. The gas pedal's going down, causing the rate of speed to go up. I told you we were going to get nerdy. I hope that this helps. I love props. I haven't got to do props in a minute. So, to that point, when you roll down, you're going from like, I started at an 80. It went up to a 90. I rolled back down to the 80. So I've removed those 10 points of delta, right? But in the process, so think of that as for every $1 move in the stock, I would make an extra 10 cents. In the process, I took off hundreds of dollars per contract in risk. 300, 400, 500, 800. I even completely eliminated, 100% eliminated all risk on my Palantir calls. My Palantir calls are free. My Palantir calls sitting in my account have already made enough money to pay for themselves, and I have no risk on whatsoever. And I gave up 10 cents a dollar. I hope that helps. I hope that explains why I roll. Because I get more money in my account today. I have less risk on the table today. And I keep the trade alive. It's so cool. It's so freaking cool. England. Got it. I knew it was England. I was close. All right, let's see. What other questions could I ask you real quick? Or answer here real quick. Bigly reduced risk. Dan says, it was a good analogy with the cars and speed. Thanks, Dan. And thanks for coming, man. Good to see you. Muck Through the Mire says, hey, random guy on the internet, let's trade. My internet's working right now. It's going to drop out at a moment's notice. Lurkophiliac says, this is how Chris rolls. What about vertical spreads to trade in smaller accounts? Sorry, I have to barf real quick. That was enough. I got to barf over here. I'm so over spreads. I can't tell you how much I'm over spreads. Because of spreads, I lost $200,000 in my accounts. Fuck those guys. Excuse my language here. But I will never trade spreads ever for the rest of my life, ever again. Why do I care so much? Let me explain why I say fuck those guys. Let's go to, tell us how you really feel, Chris. I know. Let's go Google up what a, I don't know, like a put credit spread. Let's look at what a put credit spread looks like. All right. So a put credit spread looks like this. Okay. So this is a bullish trade. Hands down, no doubt whatsoever. This is a bullish trade. If the price of the stock goes up, let me draw on this. If the price of the stock goes up, sweet, we make money. If the price of the stock goes down, we lose money. Okay. Like any other trade, right? Yeah, I got triggered bigly. Right. So here's the deal. You might make, here we go. You'd make $100 on this trade, total max profit. You're not going to make anything more than this. You know what? Debit spread, credit spread, doesn't matter. Same thing applies. You might make $100 if you do it right, but you might lose $400 if you do it wrong. And this is what happened to Chris all the time. I had 84% win rates, legit 84% win rates, and I lost money hand over fist. Why? Because it would take me, and in this example, right, it would take me 4 perfect trades in a row for every 1 trade that I lost. Every 1 trade that I lost would take me 4 perfect trades in a row. But no. That was too easy for Chris. No. Chris did it more like $800 losses or $1,000 losses for every $1 risk. It wasn't 400. It was more like 800 to 1,000. Right. So I'm looking at a 8 or 10 to 1 risk to return. Right. Why in the wild world of sports would I ever do that? But I thought I was a genius because I had 84% win rates. Now let's flip the script a little bit and let's do a call debit spread. By the way, I dare you to find anybody who knows more about options than I do. Dare you. The only people who will know more about options than me are Mr. Black and Mr. Scholes, the ones who created the options pricing model. I can't tell you how much options are my thing. Just try it. So this would be a call debit spread, meaning you buy a call here and you also sell a call here, right? What a dumb move. What a dumb move. Because I am of the opinion of I want unlimited profits. I want unlimited profits. Let's just do this with a long call real quick. Hang on. I want unlimited profits. However, if I do this, what's something I don't have? Unlimited profit. What's something I don't have? Unlimited profit. So why would I do this? I'm putting on probably the same amount of risk in my account, right? The same amount of debit in my account for every trade I put on. Yet I'm stopping my potential outcome here. And this isn't theory, right? When this option is gaining money, this option that you sell against it is losing money. And so now you've introduced another component into this, which is the time value. Now what you need is you need time value. You need time to pass. F that noise. I want my shit now. I want to get paid today. I want to get paid money now. And by introducing the call that you've sold into here, now you've introduced another measure that I have to wait for time to pass. No, thank you. No, thank you. So nothing personal, but options are meant to be bought. Do not even think about selling them. I mean, unless you want to throw money away. And spreads are basically the most useless trade of all time. Nothing personal. But you asked my opinion, and I gave it to you. It may not feel good. It may not feel good, but it's the truth. Sorry, Wes. Sorry, Wes. Please excuse my apologies there. Manny, I hope you put earmuffs on your little guy out there. Nico. Was his name Nico? I feel like it was Nico. Either way, super stoked y'all are here. All right, let's do this. Let's change gears and let's get to trading here. And here we go. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And Outlier University, it's live. Outlier University is happening.
Are you ready? Let's go!
Respect is earned. Respect is never given.
Luca needs to go join us over in Outlier University. Manny, I see you spamming it so hard right now. I appreciate that. Luca needs to join us over in Outlier University because we are doing this every Tuesday and every Thursday. We are going to go through all the lessons, everything that I know, including why selling options is a horrible idea and spreads are a complete waste of time in Outlier University every Tuesday and Thursday in the afternoon at this exact time, in fact. So I hope you can come and join us live. I have 8 gentlemen who are joining me in the live streams each day to make sure that we do this the best way that we possibly can. So the first replay of that went up this morning. If you missed it, it'll be over on my YouTube channel. So let's jump into today's member highlight over on our Discord. And there's so much going on in the Discord. Everybody, it feels like everybody is winning over in our Discord. So I just want to share a few big wins here real quick. Hold on. This is the share your big wins show. Yeah. I tried to tell everyone I know about Outlier. Rick, I think you might be in a cult. Blink once if you need help. Yeah. And Rick was like, yeah, a cult that prints money. Let's freaking go. Let's see. My whole portfolio, this is from Steve, says my whole portfolio is up 75% this week. We're retired, and I thought I might have to sell our rental house because of how bad my trades were. Not now. Thanks to Outlier. Thank you. You are so welcome. That gets a little Outlier emoji. Right. Let's see. Mikey B. Hey, he's usually here in the chat. Let's see if he shows up. I've been following along with Chris and made some of my own trades following the Outlier principles. Rolling up for a credit is such a crazy hack, and it is game changing. I have a long call I bought a few months ago on Microsoft, and it's now at a 94 delta. I'll be applying the principles I learned here to collect a partial profits and roll it up to an 80 delta and keep the trade going. Thanks, Chris, for teaching us these gems. You are incredibly welcome. I'm sharing this strat with another investing Discord. Don't do that. Screw those guys. Tell them to come join our Discord. And I'm in with some friends. Some of them already joined Outlier with me. Now we're talking. Let's keep the good times rolling. You're changing many people's lives along with the rest of your team. Much love to you, dude. I'm so glad that you're here. I'm so glad that all of you are here, right? So, of course, continue to share your stories in the Discord. We want to hear from you. And the first rule of Outlier is you tell everybody about Outlier, right? Don't keep this a secret. Now hit the like button. Let's get back to trading in the Outlier trading room. Real quick, what is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy, and greedy when others are fearful. There's my friend Michael Badinsky. Outlier shows you if investors are acting irrationally fearful or greedy, and by how much, allowing you to get into the Outlier move get into the stock before the Outlier move happens, right? Now, if you're ready to save time, make money, and start winning with less risk, which is what we do here every day, and of the 529 people who are watching right now, this boggles my mind. For context here, January 5th, there were about 10 people that would watch me live. May 14th, 531 people are watching us live right now trade. How cool is that? So if you're ready to save time, make money, start winning with less risk, be sure you head on over to outlier.com. Get the annual pass for just 82 cents a day, or if you're on the monthly upgrade, you need to click the button and save 64%. There's no reason not to do that, especially if you've seen how much money you can make doing this, right? Now, my style of trading using Outlier is called the golden ticket trading strategy. So we let the market tell us what it's doing, right? We do that by starting with the SPY. In fact, I used to call this the master key, and we're still going to call it the master key, but we're going to focus in on the Outlier 9. Knowing the Outlier 9 is going to change everything, right? 40% of any stock's move is due to the market. 30% of every stock's move is due to the sector. 30% of the stock's move is due to the stock itself. Now, keeping this in mind, this is what we're looking for on each one of these things. So let's first go look at the trend of the market. And we can do that so easy inside of Outlier. We just do a one button click over here on SPY. This is my favorites list right here. So I click SPY, and it's going to tell us in 1.1 gigomilliseconds. I was going to say gigawatts, but that's not right. If you watch Back to the Future recently, like I did with my kids, you'll know. 1.21 gigawatts. In fact, we looked that up one day. It would take 1,700 of my cars to equivalent to 1.21 gigawatts. I thought that was funny. So we are looking at this, and at 1.21 gigaseconds, we can see right here that we are in a bullish trend. The 10s over the 20, prices over the 50. We can see that hands down, not even a question about that. Next, the signal. We're sitting on a buy signal in Outlier right now. So we got a bullish trend, a bullish buy signal. And lastly, let's go look at the breadth of the market. And let's go to here. Let's go to full stocks. That's what I want to see. So we cover about 2,600 stocks, and we're adding more all the time. We can see that the market cycles quite frequently. It's a very, very common thing to do in this market cycle right here. We want to be getting in as the cycle is moving up and getting out of the way as the cycle is moving down. Now, if we zoom in really tight right here, we can see the cycle happened right up here. This is the highest cycling that I've seen. I was looking at this earlier, since November of 2023. This is the highest cycle point since then. You know what? I ain't gonna complain because I've made a lot of money since that point. But the point is that we still have a bullish market breadth right here. This is what we're looking for. So bullish trend, bullish signal, bullish breadth. Next, let's go look at a handful of stocks. Before we do put on any new stocks, let's look at reducing the risk in the ones that we already have before we add new trades. So these are my exit criterias right here. We're going to go through those stocks I have on one by one and close some tabs here. And we'll do this as easily as we possibly can. So first is Datadog. Now, Datadog, we rolled this a couple times already. It's been printing so much money, right? But is the 10 EMA broken? No, it's going up, so we don't have to worry about that. Is it a half ATR from the rolling point? No, it's not. Are there any order blocks? Nope, no order blocks. Well, there is one up here at 127, but not even close to that yet. And the Outlier heat map. Let's go to the Outlier heat map on Datadog. Dude, Dustin, the breadth might flatten or go slightly down tomorrow. You're right. Or the breadth might go slightly up tomorrow. Or it might go up bigly, or it might go down bigly. I don't know. I don't know. But I'll tell you one thing. I'll be looking at the data instead of trying to predict what the data is showing me. Looking at Datadog here. Let's move this over. The Outlier heat map. So the current value is at 63.52. And it ran up from the entry point at 47.81. Okay. So for me, my exit signal, it did not stall. It was continuing to go up. My exit signal, if it's in the 50s or less, is at 63. And that's exactly what I have today. 63.52. Right. That's what I said on the chart. I made my plan to get out. I knew exactly where I'm going to get out before I got in the trade. This is so important. From now on, do not even think about putting on a trade until you know where you're going to get out. I'm going to get out right here because this is my plan. So we've done a lot of work on Datadog. And if you want the receipts, they're all over YouTube. And they're also in our Discord here, Outlier Trading Room. And Datadog, let's see here when I rolled it right there. We rolled up from the 106 to the 110s. So we're going to close the 110s. I need to copy my little template right here. Hold on, where is it? Where is it? Just a moment here. Hang tight, hang tight. I need to copy my template because I'm far too lazy to write this out again. And I make sure, here we go. Make sure that I do it correctly. All right. So looking at this, we're going to close the 110s on Datadog. I mistyped that, DDOG. And this is on the May 23rd cycle, 110s. Right? Yes, the 110s. Now, where can I close it at? 945. Let me see if I can get filled at 945. Close position, full. 945. Let's go. Working at 945 right now. So that's not filled yet. I may have to bump it down. Replace. Let's go 940. 940. Oh, wait. I think it filled right when I was trying to do it. Filled. Sweet. All right. So I'm completely out of Datadog. Filled at 945. Completely out of Datadog. Filled at 945. So this is May 14th. Trade number 1 closed. Oh, you're going to love this. DDOG. This is the 523. 110 call. Put in the chat how much money you made, percentage terms. I want to know. I want to know what percentage you just made on Datadog in total. Because I've made... What did I just close that at 1045? 945? I made, yeah, it was 945. I made 106.79% on this. Beat that. You probably can't beat it. Let's see. Heat map target was hit. This was from Robinhood, who I made 96%. This I made 106.79% total, including the rolls. And this grew my account. This one trade grew my account by 9.21%. Receipts are on YouTube if you don't believe me. Hey, like that. Dormworth made 109%. David made 106%. Pat Van made 10%. Ahmed says he can only trade 1 share, and that's okay. That's okay. Or he can only trade shares. Gerald says 104.6%. Can you believe these numbers? These are not numbers I'm making up. These are numbers that our outliers are experiencing right now. Saving time, making money, and starting to win with less risk. How cool is this, right? Pete made 54%. Mike made 95%. Albertito made 107%. Koopa made 110. Shay made 101. Montgomery Sexton made 108. Stocky, like I said, these are crazy numbers. I know, but this is my jam. This is why I tell you, sit in cash and don't F up. Mitch says, still running a paper, didn't actually make anything, but he learned a lot. He learned a lot. Wes made 102%. Jean-Louis, 94%. Dr. J, 23%, but he just got in yesterday. That's not too bad, right? Ashley made 69%. Nice. Steven made 91%. Let's go. Frankie, 53%. Big Road Driver, 105%. Isn't this awesome? Congratulations to everybody. Congratulations to everybody. I'm so proud of you. Okay. How you make 100% on a trade and doing 35% a year? It's called position sizing, my friend. Position sizing. Jim, 114%. Shame. Nice. Ranjith, 106. That's right. Yeah, why would I trade my entire account? No way. No way. Not in any one trade. M. Baker, I made 36% and I got out on the first day due to other time constraints. Mike says 75% on Hood. Let's go. Yeah, Soccer Mom, 105%. Okay. I could do this all day. Congratulations to everybody. This is awesome. Let's move on to the next one. Oh man, I'm so stoked. I'm so proud of you. Let's go. Now, going through this experience right now, is this not the opposite of what you've done your entire life? Is this not so much different than logging into every YouTuber who's screaming buy on stocks that are just like dying, where it's, oh wait, maybe you should buy a stock as it's going up, right? Buy stocks as they're crashing up, not stocks as they're crashing down. Congratulations to everybody. Congratulations to everybody. Okay, we have a lot to do. Thank you so much for Michaela for letting me know that I need to quit talking and do more. Okay, got it. Datadog's off the table. Let's go to the next one. Etsy, it's not doing anything. It's literally going sideways. It's not below any reason that I need to close. So looking at my list right here, I don't have any reason to take off Etsy. Etsy stays on. Let's go to the next one. GM, again, it doesn't have any reason for me to get out. Looking at the heat map on this, said I get out at 63. Heat map is where? Yeah, Dorma says, it still feels like a dream that I can actually make money trading. Yeah, it's because you finally found the right YouTube channel. It only took 2,000 videos for me, literally 2,000 videos for YouTube to start recommending me. Yeah, there you go. 57% on the fear and greed on GM, so I don't have a reason to get out. It doesn't hit anything else for me, and that's okay. And finally, Palantir, our old pal Palantir, printing all kinds of money, and I have no risk in this trade, peoples. I have no risk in this trade. This trade is 100% free to your friend Chris, and I own way more of it than you think that I do. I mean, a lot more of it than you think that I do. I own way more Palantir than I ever thought I would in my entire life. Let me get a little closer here. It's free. Palantir is 100% free to me. Tom Nash, eat that. Eat that, Tom Nash. All right, so Palantir, again, for the sake of speed, I don't have any reason to get out. None of this is hitting for me today. But you know what? Tomorrow's another day. We'll have to see tomorrow. So let's go to the next step. The next step for me is to run the screener. Now, I had a couple of people asking why Uber was not on my radar today. And so I want to jump into that, right? So Uber did pass through my screener. And let's go to that real quick. Yeah, eat it, Tom. Eat it, Tom Nash. So Uber passed through my screener. Let's find Uber real quick. Right there. But I did not take Uber. And the question was, or I haven't even been looking at Uber. The question was, why not, Chris? Why aren't you looking at Uber? So let's go to market breadth and I'll explain why. Let's explain why. So we're looking on the full stocks on this breadth crossover point here. Remember we talked about that? How high this crossover was? This crossover happened on May 8th. On May 8th, if we go to the industrial sector, which if you ever want to know, you just pop into Outlier, type it in, and it tells you right here, that industrial sector. Let's go to the industrial sector, which I would not have put Uber in the industrials. That's, I mean, I didn't categorize it, but I wouldn't have put it there. May 8th was where the crossover happened on Outlier. Or it was the 9th. So this is May 8th. This is May 9th. On the industrials, it was greater than 75% on this date, 79.02. The next date, it was at 78.74, meaning it's going down when it's greater than 75%. Now, let me explain where I'm going with this. This is why I have slides. Here. If the reset occurs on the market, you can trade the sectors that continue to rise and are bullish from that reset date. This is the small change that I made to this, right? That sector did not continue. It has continued to rise, but my rule is if it goes over 75 and ticks down, halt new trades until it resets. So that's why I didn't look at Uber. That's why I'm not looking at Uber, and I don't care, right? It's just my rules. And if it fits for you, by all means, go for it. By all means, go for it. So running through the screener here and running through several of the charts and running through this because we don't have all that much time left. SMCI, Apple, and ExxonMobil were the only three that pulled through for me. Now, looking at ExxonMobil, I'm not going to take this trade. I thought I was earlier, but I'm not. Reason being is that one of my rules right here is it has to be above the prior day's low. ExxonMobil is not above the prior day's low, so I will not take ExxonMobil. I would not buy ExxonMobil right now, even with your money. I was looking at SMCI, a huge move up right here. Now you're probably thinking, Chris, you can't buy it up there. You can't buy it up there, Chris. Oh my gosh, you can't buy it up there. Let's just look over here real quick. Look over here real quick. All right. We want to buy stocks as they're crashing up. We don't want to buy stocks as they're crashing down, right? Does that mean it will continue up? We don't know. We just do not know. But the buy signal came today. And I'm going to follow my plan, which actually has me buying SMCI on this huge move up. And that's okay. And if it doesn't work out, that's fine. That is totally fine. And then Apple's like chilling like a little villain right here, pulling right over its 50 period EMA. And this one looks totally legit to me. So we'll start with Apple because I only have two. And then we'll spend the rest of the time after we put on Apple and SMCI answering any questions or looking at any stocks that you want to look at. But don't put them in the chat right now. They'll get lost. They'll get lost. So looking at Apple, I put earlier in the Discord that I'd be looking at the Apple June 6th 200 calls. Now, why the June 6th 200? Let me go through this real quick so you know. I'm looking to start at 21 days to expiration, over 250 open interest, less than 50 cent bid-ask spread, 20% or less extrinsic value, generally always puts me around the 80 delta. So looking at the 200s right here, that's at the 76 delta, over 200, 250 open interest, so that's fine there. The bid-ask spread's only 10 cents. And how much extrinsic? 250 on 1415. 1450 is how much? 1415. $2.50, 2.50 divided by $4, $14.10 is 17% extrinsic value. What's up, John? How you doing, my friend? So for me, I have no reason not to take this trade in Apple. Apple, June 6th, 200 calls. Apple, June 6th, 200 calls, buy to open. Get your position size. Do not think that I'm telling you to go buy 200 calls in Apple, right? I'm not buying that many. I'm buying plenty, but I'm not buying 200 of them. Okay. And I'm going to go to my business account on the other screen. Like I say, I trade multiple accounts at this point in my life. So I have a little bit of work to do on this side. The 200 calls, get the right position size. Okay. And let's see if we can get filled at 1403. I'll try 14, see if that gets filled. So I'm buying the June 6th Apple 200 calls. I'm definitely not going to get filled at 14. No way. I'll try 1405. Replace 1405. Fill the 1405. I'll take it. Okay. So let me put this in the Discord. So trade number 1 for the day. Hold on. I have a template. That way I tell you guys everything that I'm looking for. Where's the bot? There it is. Here we go. Today is the 14th. Trade number 1. Bought the June 6th. Apple calls. The 200. Or did I get filled at? I don't remember. 1405. 1405. Apple's currently trading at 211.51. And in just a moment after we do the next one in SMCI, we'll go mark on the charts where I'm going to get out of Apple. I know where I'm going to get out. Right, do you know where you're going to get out? It's a great question here. Do you have any idea where you're going to get out of Apple? Because I sure do. And I know you're probably thinking, I'll just get out when you get out, Chris. No. This is not how this works, right? I'm here to teach you how to fish. I'm not here to hand you the fish. All right. And please don't make this any sort of like biblical, Chris, you're doing the Bible work, whatever. Right? I'm just doing my thing. Okay. I need to teach you how to fish. I'm not just going to hand you the fish. Now, I'm kind of handing you the fish here, but you need to do your own work. You need to figure this out yourself. Okay. So, bought the Apple calls. Let's go to SMCI. Let's go to SMCI here. Now, some people, this would scare the bejesus out of them. Say, no way. Are you kidding? Look how high that's moved. I want to give you a little perspective here. When we go look at SMCI, and we go to the 6-month chart, right? This giant move right here. The buy signal came on February 7th. The buy signal from Outlier came right here. Now, at that time, there was an order block in here. So if I had taken it, which I didn't, but if I had taken it, I would have got out on this candle. For sure, no doubt about it, I would have. But it continued to run, okay? Don't be afraid of a stock that's gapped up, right? Were you afraid of SMCI when it gapped from here to here, right? We could be in that exact same situation again. We could be. I don't know. I don't have to know what's going on with the market to make money. I don't have to know what's going to happen next. I have to know where I'm going to get in and where I'm going to get out and why I'm going to get in and why I'm going to get out. That's all I have to know. That's all I have to know. Okay. So looking at SMCI, let's go over here. SMCI. Going to look on the June 6th expiration. Going to start here on the 80 delta. That has 890 open interest. 142 over 920 is how much? 1.42 divided by 9/20 is 15% extrinsic value. I can live with that. But what? Maybe we go one small. If we go down 1 to the 38, that's a 77 delta. And we don't have to pay 70 cents as much. Still 15 cents wide. Hang on. Is that extrinsic value okay? That's what I care about too. It's how much is this going to cost me? 174 divided by 845. That's 20% on the nose. That's what I'm going to go for. The 38s. All right. So I'm going to buy the SMCI June 6th 38 calls. SMCI. Going on the other screen here. SMCI June 6th 38 calls. And get your position size. All right. For 838. Try 835. I'm going to fill 835. Fill 834. I'll take it. 834. Okay. So I'm in SMCI June 6th, 38 calls for 834. Let's put that here on the Discord. Then we will look on the chart where we're going to get out. And then I'll be here to answer your questions and help you out and look at any chart you want to. SMCI. So it's the 38s. And I got filled at 834, right? Double check that on the activity. SMCI fill at 834, yeah. And currently SMCI is trading at 44.59. Cool. Now, like I say, let's go put on the chart where we're going to get out. What is the preferred extrinsic value level? 20% or less. 20% or less. So let's go look over here. Let's do Apple first. So the way I like to mark up my charts is pretty easy. First, a vertical line where we got in today. And then I got this handy dandy little tool over here that shows my ATR levels. So the green line is my opening here. The orange line is a half ATR stop loss here. Oh, but we ain't taking that much risk. I'll show you why in a minute. And the next line is one ATR up. If it works, that's where I'm going to look to roll. And one more ATR up here. And look to roll again. Okay. Now I can turn these off. I won't be putting on any more trades or taking off any more trades. So total trading is actually done for the day. But let's take a look at this. I'm going to take less risk in this trade. And I want you to tell me in the chat where I'm going to put my stop loss. You tell me. Now, of course, Like, I'm not going to put it as a market order in the market. I'm going to wait till the end of the day. I want you on this chart right here to tell me what you see and why I would put my stop loss there. Go. Underground Jim says 10 EMA. Albertone says 10 EMA. Steven says a 50 EMA. Why don't you see the order block? I don't know, dude. I just don't see it. And I'm not going to stress on it. I'm not going to stress on it. Nate says 450. 450? 450? This is huge on Apple. Bender says close of the first gap up candle. Oh, that's a good one, actually. That's a good one right there. The bottom of that for gap and go. This is, by the way, this is a gap and go. It gapped up and it's going. A gap and crap is where it would close underneath the low of that candle. That's a really good answer. The 50. Dr. J says 207.91. Good answer. Random guy says 650. Tyler says a 50 EMA. Nate says a 50. Optimus says the 50. Ryan says close below the previous day. All of these are fantastic answers. All of these are great. And the reason I wanted you to do that was I wanted you to look for where's the least amount of risk. I want you to look at that. I want you to start looking at charts today and say, where can I get out with the least amount of risk? You're not going to find this on any other YouTube channel, right? Those jokers are going to tell you, buy it. It has to go up. It should go up from here. The company is great. Don't you know that they got an iPhone 32 that's about to come out, right? The fundamentals are fantastic. The EPS is so good on this, right? The cost to spread ratio with the cash flows going inverted are amazing. The fundamentals don't lie. Shut up with your fundamentals. Where's the least amount of risk? That's what matters. For me, it is the 50 EMA, right? This is my half ATR right here, half of an ATR down. The 10 EMA is lower than the half ATR. So I wouldn't pull it down. In fact, Larry Height and I had this specific exact conversation. Larry Height's the first $1 billion hedge fund manager, one of the original market wizards. He and I had this exact specific conversation. He said, you can never, ever lower your stop. Your stop can only go up. Your stop can never be pulled down. So the half ATR, that's my stop loss point. I'm not going to move it down. But I do see one spot that absolutely would make a lot of sense to me if it closed under here, because we'd have the 10 over the 50 or 10 over the 20 and price under the 50. That doesn't make sense. That's not a bullish trend. So that is where I would get out. Isn't that cool, right? We worked through this. We understand why we worked through this, right? This is not just a YouTube video where somebody just tells you how smart they are, right? Hey, look at me, how smart I am. No. The objective here is to teach you. The objective here is to teach you how to fish so you can do this too. So looking at Apple, which is like gangbusters at the moment. Thank you very much. I'm already very profitable. Look at this go. I'm not mad. Okay. So that is where my exit will be. And that's on the 50 EMA. Pretty sweet, right? Pretty sweet. Okay. Let's do the same. Oh, wait. Before we move off of Apple, let's go in here and get our heat map exit. I did that wrong. Let's look on here and get our heat map exit. 650 people are watching this right now. This is bonkers. All right. Looking at this. All right. So today's buy signal came with fear and greed of 39. Fear and greed of 39. A lot of people don't want to own Apple right here still. But this is where we're going to start getting greedy before other people start getting greedy, okay? The sector is still moving up on the fear and greed. The sector is still moving up on breadth. The stock, I mean, we're looking at the Outlier 9, right? Looking at the Outlier 9, every bit of this is lit up. Every bit of this is bullish. There is nothing bearish about this to me. Even though that's the case, we don't know the outcome of what this will be. So we still have to follow the plan. So fear and greed at 39. And for me, on my exit points, if it's anything 0 to 50, we get out at 63. We get out at 63. So I'm going to make a note on here. Sell into strength at 63. All right. So easy enough. We know exactly where we're going to get out. If this is hit, if it hits 63, if any one of these happens here, This is so important. This is so important. This is so important. This is not buy it and hope for the best. This is following a predetermined plan. So I know where I get in and I know where I get out. And this is why I try to convey to you in all these trades, right? It's so much fun to look for new trades. It's so much fun to see how much money Chris is making. It's so much fun to look in your account and see how much fun or how much money you're having today, because you probably are looking at brand new all-time highs in your account today if you're anything like me. If you're anything like me, you're looking at your account right now and you're like, I cannot believe I have this much money. That's how trading's supposed to be. Trading is supposed to be effortless. If you've been following me in the last week, what is the one word that would describe this trading? Effortless. That's how it's supposed to be. It's not supposed to be stressful. It's not supposed to be scary. It's supposed to be effortless. And that's when you have a trade plan in place and you follow it. So Apple's going to do its thing. We're going to move on to SMCI. SMCI. All right, so let's pop this open here. Now, it's been a couple minutes, and we saw Apple's already moving quite a bit since that point. Let's see, where did Chris get in here? 44.59, and it's already up at 45.15. I ain't mad. I ain't mad. It does make it a little bit harder to keep up with my ATRs, but I ain't mad. Let's do the opening at, what did I call it? 44.15? 44.59. Coordinates 44.59. All right, that's where I got in. Now I'm gonna have to do some math here. Oh man, I do some math. That's okay. Teach you the math. Here we go. So we look at our ATR value right now. ATR value is at 3 1/4. So we take 3 1/4, 3.25 divided by 2, and then we subtract that from the current price. That's my stop out point, 42.97. So we're gonna pop that up here. 42.97. Okay, so I know for sure I must get out right here, which is really close. I actually can't even tell. Where's that at? Hold tight. Remove. I want to remove this line. I want to see where the bottom of that line is. The bottom of that candle. Oh, look at that. Right at the bottom of that candle. I'll take that. I'll take that. Now, why do I care about this? If it closes below the bottom of this gap candle right here, that would be considered a gap and crap. I would get out of the way. I would get out of the way. But in this case, who knows where it's going to go? We're going to let it do its thing. So next, we're going to do one ATR up from entry. So we're going to take the ATR value of 3 1/4, 3.25, plus where we got in at 44.59, 47.84. Put that on the chart here. $47.84. Okay. And let's do it again. 51.09. Cool. So now I have my plan. Well, one last thing. Where would I get out on the heat map? JT, I made it. I actually had ChatGPT make it for me, but I made it. It's in our Discord, by the way, in TradingView Pine Scripts. I don't know how to share it as like one thing, so I just pasted the whole code in there. I have strengths, I have weaknesses. Computer code is one of my weaknesses. Trading is one of my strengths. Anyway, back over to here. SMCI, buying it today gives us a heat map value. Look at this. The heat map value is so flat. So flat. It's at 49.93. So my exit point would put me at 63 on the heat map. 63 on the heat map. So it's exactly the same as Apple. In fact, it's so exactly the same. I'm going to copy it because I'm lazy. Damn. Selling a strength of 63. You like that? So that's my plan. So now I know exactly what I'm going to do. I know exactly what I'm going to do in both of these two trades. I know exactly what I'm going to do on the other 3 that I have on because I no longer have datadog on. How cool is that? Now it's time to help you out. How can I help you? Put some questions in the chat. Put some stocks you want to look at in the chat. We got a couple minutes. I want to help you out. Okay, I do this for you. I don't have to do this. Trust me, I do not have to come on YouTube and be a dancing monkey with all you other guys, right? With all you other monkey donkeys. I do this because I love the game, right? I do this because I love the game. Alu says, how does ATR work? ATR is really cool. ATR is one of the most important indicators ever. And you may not have ever heard of it. So ATR measures volatility in a stock. So if we look at SMCI, right, before this giant run, SMCI's ATR, looking at the bottom, it says 2.39. When it reached all the way at the top and then all the way back down, ATR was at 545. So the ATR had doubled. ATR is the average true range. This is the measure of volatility per candle on average over the last X number of periods. I just use the default 14 periods. Now, you can also use it in position sizing, which I do. You can also use it for knowing where to get out on the chart, which I do. You can look at it for where to roll your positions, which I do. It's so cool. It's such a completely versatile, amazing indicator. I wish more people understood how important it is to trade based on volatility. Patrick says, Chris, if it gaps and craps, do you close immediately or wait until the end of the day? I do everything at the end of the day. Everything at the end of the day. But that's just me. Shane, I don't know Mosaic's ticker. Tell me what it is and I'll look at it. I think you have a different definition of effortless than I do. Yeah, well, listen, like a doctor could perform heart surgery and he would say, oh, this is effortless. This is my heart surgery, if you want to look at it that way. That's why it feels effortless to me. I completely get it. I guarantee you, Eric. Hey, I bet, Eric, I don't know what you do for a living, but I'm going to guess if you're a roofer, you make roofing look excellent, just effortless, excellent and effortless. Or if you're an auto mechanic, I bet you make working on cylinder heads look effortless. I bet you do, man. If you are if you're a bank teller, I bet you make helping everybody who comes through that drive-through lane or helping the people who come through the lobby look effortless, right? We do have different definitions of effortless, but trading should always be effortless, no matter what. Francis, Sue Long, you got it. Let's look at Sue. SU. And we'll go through the Outlier 9. Trend signal breadth is going to be the same on everything, right? This is all bullish right now. Next, sector, fear and greed. Sector, fear and greed. Moving out of fear, moving into greed. Outstanding. Breadth on the sector. Moving up strongly, bigly. Oh, this is in the energy sector. Yeah. In fact, Sue may have been one of mine. I did look at Sue earlier. I'll tell you why I didn't take it in a minute. So this is bullish. Trend on Sue. Looking at it here, we got a green overlay, means the trend is moving in our direction. The fear and greed for the stock is moving up, and it's got a buy signal today, right? So we got everything right here. Let's double check those order blocks on Sue. No order blocks till way up here. So Chris, why didn't you take this trade? Let's go look at the options for Sue. But here's the deal. If you're buying stock outright, Sue looks great. Sue doesn't fit my style of trading, and this is the important part. This is my style. Your style is going to be different than mine because it didn't have enough liquidity. It lit up everything in the Outlier 9. Sue lit up everything in the Outlier 9. But for me, I didn't trade it because it didn't have the liquidity. And that's the important part for me. How do you control your trades? Alarms on the phone or something? No, I just show up every day with consistency and discipline. What do I mean by that? Right. Let me show you what I mean. Here, this one. I always say you could publish the rules in a newspaper and nobody would follow them. The key is consistency and discipline. I only trade at the end of the day. I'm consistent with when I trade at the end of the day, and I don't worry about it, right? There are times where I'm going to lose on a trade. It's part of life. But I'm not going to stress over it because I'm just going to follow my plan. So how do I control it during the day? I just look at the end of the day like I do otherwise. Let's see. Chris, what does this mean? Buy one to open June 6, 2025, 200 call at a 5-cent limit. So that means you are trying to buy it for a nickel. You're not going to be able to buy it for a nickel. That's what that means. The current price of that on Apple, the 200 strike, is $14.75. So in order to get filled, you would have to change your price from 0.05 cents to something around $14.75. Hey, Mikey Mike is catching some fish now. Outstanding. Okay, Sean asks, if you're not half ATR, is going to be Wait, hang on. Let me make sure I read it correctly. If you not half ATR is going to be hit, maybe you mean no. If you know your half ATR is going to be hit at the end of the day, do you close at the end of the day or let it close and sell at the opening of the next day, regardless of the next day's action? So first half of the question, I always move on the day when something's happening. I get this question quite a lot, Sean. So you're in good company. I always move on the day where I see that happening. Now, it can absolutely wick through my half ATR and go back up, which is why I'm not even worried midday if it does wick through my half ATR. Like, let's say Etsy wicked through my half ATR. I don't know if it did or didn't, but it kind of looks like it did. Right? I'm not stressing on it. I'm only going to close at the end of the day. If it closes under my half ATR, it looks like it's going to close in the last 30 minutes or so. That's where Chris looks to get out on that day. I definitely don't hold it overnight. Right? And I'll show you why. Here. You've probably seen this before, Sean. Knowing you should sell when your stock does this, right? You buy it and it comes back down, right? That's equivalent to saying I bought it here and my half ATR is down here. And you don't on that day because you're like, oh, I'll give it one more day to find out. Trust me, I've done this so many times, Sean. You are absolutely in good company if this is you. And everybody else watching, this could totally be something that's happened to you. Knowing you should sell when it comes down here, but you don't because you're afraid that this will happen, right? You're afraid that if you just give it one more day, maybe it'll turn around. But unfortunately, what happens is you get caught in an even worse move. So I'm not saying that it will happen every time like that, but it can. And because it can, I don't let it happen. All right. I'll do one more question and then we're going to bounce out of here. Georgia says, first time trading options today. I got filled at 8:33 and 14. I hope I did it right. I hope you did too. Ben says, treated too early and got screwed. I won't do that again. Dude, no. Don't think of it like that, Ben. Think of it like, if you trade at 11 a.m. every day, that's going to be your time you trade every day. If you trade at 2:30 p.m. Central Time, like I do, that's going to be the time you trade every day. Don't think about it being too early or too late. Find the style that works for you. Peter, this is going to be my last question. Peter, I had a question, or I had a plan to sell cover calls on my SoFi and Palantir stocks to get them cheaper if I get assigned. Is this not a reliable options trading plan? Peter, are you underwater on these stocks? I can't get behind anybody selling cover calls at this point in my life. I see no benefit to selling cover calls at all. Selling covered calls is akin to just like putting on your trade, take in a couple extra pennies, and then if it works, you don't let it work because you have axed the trade already with that cover call that you've sold. So I'm not a huge version of or a huge fan of covered calls at all. But you know what I am a big fan of? I'm a huge fan of making money, saving time. I said it wrong. I am a huge fan of saving time, making money, and starting winning with less risk. And if you are too, you should watch one of these two videos and have a fantastic day. I'll see you in the morning.